and do some more trading. Alan Nuckman's Chief Market Strategist at Agora Financial. He's down at the SIBO. Alan, you look rested after the weekend, so let's get started here. You ready to buy up stocks? Let's just keep piling on.
I'm ready to go. This is a bull market, baby. Look at that action from last week. It tested and rejected twice, made new swing lows and actually closed higher, shook off all those stock shock concerns, and the markets continue to make new highs on a weekly basis. I don't know how many weeks in a row that's been, but not everybody's played ball. So the stock we're looking at today, Corning. Corning is GLW. Corning's actually unchanged in the last 52 weeks. Compare that to the NASDAQ, which is up 35%.
All right, so is this, by the way, at $29, it's basically exactly where it was. You're right, totally unchanged. That is right. Despite being within the smartphone supply chain, Apple going berserk. So is this a matter of just looking for companies that haven't been taking part in the party?
Yeah, and technically you can see a bottom base built here now. This is a stock that's traded between 27 and 31 since August. And now we're pressing on that 31 level, or we had been. We'll see if it can break out. There's a gap at 32. And looking at this, 31 is also the halfway pivot of the action over the last 52 weeks. This thing topped out at 35 back in April, so it's 15% off the highs. And the PE, I know we love to talk fundamentals here, the PE is only 16. So it's cheap compared to everybody else in that sector. From a risk-reward standpoint, this is the kind of play I look for. And I'm seeing smart money loading up on positions in Corning. Somebody sees something. So the way I play it, my stock substitution, my same old strategy, buying an in-the-money call that's going to act like the stock. So the 27 call is down there at the lows of the year. The 27 call for March is trading right now for about $3.50. We're trading at $30, so our break even here is relatively close. We've got a little bit of time, and looking for something to happen here relatively quickly. The technicals have set up for a little bit of some action and some breakout above that 31, fill in that gap at 32, and then things should be up and away.
Yeah. All right. So, Alan, the stock replacement strategy, break even 75 cents. And correct me if I'm wrong, I think we've talked to GLW before, but the idea here is, look, it looks like it bounced off that low again. On the charter, technically wise, where's sort of the next stop? I mean, is that where you're putting your break even, where you think a place that might run into resistance, or, how are you considering kind of the upside and whether or not you want to continue the trade?
Well, what I'll look for is I'll look to see if it attacks that 31 level. And if it doesn't, right now it's $3 in the money, it's trading at $3.50. So the break-even's 50 cents away. If it heads back down, the halfway point between 27 and 31 is 29. So I'll look at 29 on more a weekly basis. So it's a very straightforward, relatively conservative positioning here. We'll look to see if we get some boosts. If we don't, we're still very deep in the money, so the time decay is not going to become an issue, which is usually people's biggest concern when they're trading options. So it's like being long the stock from 27, but we're tying up a lot less money. Let's see if we can get a little bit of a rubber band snapback on this stock, because a lot of these shorted stocks or stocks that haven't participated, all they need is a little bit of a catalyst, and then people are running for cover, and it's a mover once again.
Okay. See, Alan, I would think as the technical guy, right, you're looking for the stuff that's already in the uptrend, but you're seeing maybe things have gotten a little frothy out there. You want to be careful, buying up Apple while it's going exponential.
Exactly. You got to balance. There's momentum trading, and then there's like trying to pick the bottom with high probability. So my indicator, which has been successful, we saw what it did in TME, we saw what it did in JD.com. We've seen this over and over and over again for stocks that test their lows and fail. And we also look for what we call bullish divergence, where it made new lows and the implied volatility didn't make new highs. So that looks like the short sellers are getting tired, and that's typically when you see a turn, and when that turn happens, everybody has to change sides of the boat, and you see a big move.
Hey, Alan, before we let you go, a heck of a call on JD and a nice trade when I think a lot of folks are still paranoid about the China situation. It's up another 3% this morning. Is it off your radar now, given how quickly it's moved?
Yeah, it's come such a long ways. We've gone from 30 to 40 relatively quickly. Let's look for other opportunities. I think there's still some stocks in that China sector. And if you look at the FXI is starting to perform. So again, it's being a bull market genius in stocks that look beaten and battered, and having good risk reward and setting yourself up with limited risk option strategies so you can be in position to be successful when that market does move.
All right, nice. Good hit this morning, Alan. Getting us off on the right foot this Monday. Mr. Nuckman is Chief Market Strategist at Agora Financial. Thank you, sir. Of course,
Thank
we'll
you.
check in on Alan and Trey, GLW. Right now, though, let's talk some more about potential turbulence ahead. Stocks right now are kind of in melt-up mode, but that has ended with some fraught action the last time we were at these valuations. Stick around. We've got another great guest coming up next.
Turn on my TV and boom, it's got all my